Hey guys, and welcome to another video. Today I want to speak about why the market went down and if it will recover. First of all, this video is more technical and trading related, so it will differ from the other videos I've done so far. But like I said, I'm not really investing in the market right now, so this is just my opinion, and if you don't have a trading plan, you shouldn't trade. Keep that in mind. Um, So this is just kind of a prediction for entertainment purposes on what will happen and a little bit about the news and situation right now. So here you can see the chart of the S&P 500 ETF. It's a daily chart and you can see the uptrend, which means higher lows and higher highs. I will explain it in another video. Started to reverse on the 2nd of August. What happened on the 2nd of August? The rating agency Fitch downgraded the US debt from AAA to AA+, which makes bond investors be more careful when buying bonds. So does that mean the USA aren't really financially stable anymore? No, it just means that the rating from Fitch was adjusted to the rating of S&P, which also is a rating agency, which also makes the S&P 500 ETF, but also rates bonds like Fitch and some other rating agencies. But S&P 500, S&P downgraded the US debt, I think 2013, also to the AA plus, and this caused a big crash in the market. So Fitch just agreed with their rating now. And why did it happen? Probably because the USA didn't raise the debt ceiling fast enough, and because Standard & Poor's also rated it AA+. So first of all, what does that mean for investors from abroad, like from Europe or other countries? It doesn't really mean much. I would still go ahead and buy well-priced stocks and ETFs, like the S&P 500 ETF, and maybe to take the opportunity to buy it slower if it goes even lower than right now. So, but what about a more longer term view on the market? Like a few month view, not a 10-year view. As you all know already, the market is overpriced. The S&P 500 mainly is overpriced. There are some companies which aren't overpriced, like PayPal, but the overall market is overpriced, with companies like Nvidia being highly overpriced, and even Microsoft and Apple being overpriced a bit. So it could go down because of valuation, which would be the only real reason it could go down. But to be honest, I don't think it will. I thought it would go down even lower, but after seeing the recent uptrends and change in how people look at the market, I think it will go up and crash in the next few years, probably a lot. So be careful and don't invest all your money at once, and maybe just use a savings plan to invest in the S&P 500. You can buy, of course, stocks like PayPal or stocks you have calculated the value of and know that they are undervalued, because there are still a lot of stocks which are undervalued and didn't perform that much until now. But keep in mind, just because the S&P 500 goes up doesn't mean it's priced fairly or it's valued fairly. I wouldn't put all my money in it. And I'm also not putting all my money in it. I'm using a savings plan to invest every quarter year. But let's use the graph a bit. You can see I've drawn a line of support which connects the lows of the uptrend, and it broke through some resistance right here, which could have made it go up and convert to an up. If you would draw a parallel channel, you would see that it's maybe got rejected up here and touched some resistance and went down, and now it could be seen that, and now you could say it touched support and could go up from here, or you could maybe wait until it gets under this line of resistance right here, which we'll just put right here around, and you could enter here with a stop loss maybe above this high. Wait, I'll draw it for you. Like that, maybe with a 2 risk to reward or lower. But like I said, I don't recommend trading without a trading plan and without knowing that you can make money in the long run. So you have to back trade. So you have to test your trading method and look at if it works. And this would just be a kind of news related or maybe a bit technical kind of trade. Or you could wait until it gets above this high right here and just enter a trade like this with a stop loss around under the support area under this low, and with a profit target of 2 again, or lower or higher depending on how you want it. What could you do if you didn't want to use a stop loss? You could just buy shares if it goes above this resistance, let's say, to buy it a bit lower than up here over the recent high. Or you could, if it goes down, you could use a level of support to buy your stocks. One entry point to buying stocks again with your savings plan could be 420 around that area, with support around this high, which is just theoretical, but you could take these as entry points, for example. Or you use the Fibonacci tool, which means you take the lowest, the low and the high, and you look at all the levels in between. Like you could use the 50 Fibonacci level to enter, which would be around 420 again. Or the 30 Fibonacci level, which would be, or the 38 Fibonacci level, which would be around, I think, 430. Or the 60 Fibonacci level, which would be 410. Or the 70 Fibonacci level, which would be around 400. These could be entry points for buying the S&P 500 lower. But please don't enter all your money at once. Just low amounts of your entire investment in the ETF. Like you could change your saving plans to enter trades when these prices are hit. And now let's look at the final method of entry, with in this case moving averages. In this case, this red moving average would be the only one which wasn't breaking, except the Bollinger Bands, but these are breaking, which you can see right here, and they are just for looking at the range, which would be around 410. It was like the 70 Fibonacci, I think. Around that area you could also enter some of your positions, which would be around 50% of the 50% down from the recent high, I think, to the recent to the low of the 2022 crash. These are some entry points which you could use, but if you really want to be careful, you could also just wait until it gets a lot lower, because it's, to be honest, it's still really overpriced. So all these entry points are still a bit overpriced for you to enter. They are all like a 30 PE, I think. The S&P 500 is at a 30 price to earnings ratio right now. I'm not sure, I haven't looked, but yeah. If you like this video, give it a like, and bye.